Hello everyone, welcome to Options with Doug. Normally streaming on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel, with a special bonus session this week on Friday due to the Monday holiday. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation, the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Just want to let everyone know that Bookmap is encouraging everyone to join Bookmap Discord. There's a lot of benefits. You can fully participate in chat and watch streams in Bookmap Discord. If you subscribe to Bookmap and verify your account, you will need, there is a free subscription available. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly for the large cap tech stocks that I trade and follow, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the S futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with the S futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis. And for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in an asset can be taken with futures, contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome. And I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, oh boy. Welcome. Glad you're here. Yesterday, oh boy says, yesterday, last 15 minutes of trade, SPX had a spike of 20 points. Was there any indication on Spotgamma tools to predict that just before it happened? If I have time, we'll go back and take a look. Note that I'll talk about the Captain Condor, large iron condor. Today is the third day of that iron condor, and that spike up yesterday afternoon closed above the iron condor short strike for the second day of losses for that iron condor. We can take a look at, if I have time. I have a lot to cover today. So we'll focus mostly on that iron condor for today, but again, take a look if I have time. Thanks for the question. All right, here's my agenda for today, Friday, January 24th. First of all, I want to go over news items, economic data, and events for today to wrap up the week, preview of next week. Then I'll go through my positional analysis. Then I'll take a look at some setups earlier today. And then finally, I'll look at the live market. And when I get to the live market, if anyone has any stocks or anything else they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's get started. Move on to position analysis. Hello, Stephen. Welcome. Glad you're here. All right, I'm going to start with the S&P 500 positional analysis. News today. Don't want to skip over that. Michigan consumer sentiment came out at 10 a.m. Let's zoom in just a little bit. Michigan consumer sentiment came out at 10 a.m. Came in greater than expected, greater than previous number. Looks like there was a bearish reaction to that data release at 10 a.m., Michigan consumer sentiment. So this week, as you know, has been pretty light for data. Of course, the inauguration on Friday, there were announcements, executive orders, announcements like the Stargate project for AI that had a big influence on stocks this week. More about that in just a few minutes. Next week, a big week coming up. FOMC meeting and announcement on Wednesday, and then large cap tech Mag 7 stocks start reporting earnings next week. All right, so Michigan consumer sentiment, a little bit of a bearish reaction to that data today. Excuse me. All right, so now we can move on to positional analysis. So this is the ES futures and Bookmap. And mostly SPY levels in play for today. And we'll talk more about that in just a minute. Let's take a step back, look at a larger time frame. Go to the SPX, underlying index. This is a one-day chart, 1 year, 1 day chart. The rally resumed more after a couple of tests of this support level, then a shakeout, final washout, and then the rally resumed to all-time highs. All right, now let's take a look at a 30-day 1 hour chart. Whoops. I don't know what's going on with my charts today. Sorry about this. Okay. All right, well, I'll deal with that later. Sorry about that. I changed my 1 day chart, looked at something else that has impacted all of my other charts. Don't know what's going on. All right, so anyway, this is a 30-day 1 hour chart. Let me point out a couple of key events. Reaction to the December FOMC. Support levels that I mentioned before, 58.32. A couple of tests of that level, then a shakeout, now rally to all-time highs. All right, these are, let's take a look at the levels on this chart. Actually, before I do that. All right, so let's take a look at the levels on this chart. First of all, the expected moves, the lower and upper weekly expected moves shown by the dashed purple lines. So you can see SPX is trading above the upper weekly expected move. It broke above that level on Wednesday. Tested it on Thursday. Broke above Wednesday, tested on Thursday. Now trading pretty firmly above that level. So that's the weekly expected move. Now let's zoom in. All right, take a look at the daily expected moves now, shown by the dashed light blue lines. Both the expected moves are based on the options market, based on the closing price for SPX for last Friday for the weekly expected move and yesterday for the daily expected move. Again, SPX trading above the upper weekly expected move and in between the lower and upper daily expected moves. And I do post those levels in Discord every day the evening before. All right, let's take a look at the Spotgamma levels now on this chart. These are shown by the dark red lines, solid red lines. These levels are quite compressed, and that is due to this iron condor, the Captain Condor, large iron condor. We'll take a look at that in just a minute. All right, so let's take a look at these levels. First of all, the put wall is at 6,090. That's a strike with the largest net negative gamma that can be expected to act as support. That's also the short strike of this SPX iron condor. That level did move up. All the levels for SPX moved up from yesterday. Just above that at 60.95 is the volatility trigger. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price dash their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price dash their delta exposure. That tends to subdue or decrease volatility. So SPX trading above its volatility trigger, trading above the upper weekly expected move. And the next level up is actually the next level is the absolute gamma strike. That's at 60.90. That's also the level the same as the put wall and the short call strike of that iron condor. And the absolute gamma strike did move up as well from 6,000, its long-term home. That's a strike with the largest absolute positive and negative gamma. Then finally, the call wall is at 61.40. That's a strike with the largest net negative, positive gamma, and that can be expected to act as resistance. And that is the short call strike of the iron condor. We'll take a look, and for those of you who may not be familiar with an iron condor, we'll take a closer look at that in just a moment. All right, so those are the Spotgamma levels. Again, they all moved higher from yesterday, strongly influenced by this iron condor. We'll take a look at that in just a moment. Let's wrap up our view of SPX with a 1-minute chart. And actually, let's see if that chart got I'm just going to go back to the chart that I was looking at. I don't know what happened. Something. All right, so there's the 1-minute chart. We'll zoom in on this again. All right, so this is showing price action for today for the cash open. Again, you can see no spot gamma levels for SPX directly in play. It looks like the 6100 level is right below, and then the volatility trigger at 60, so the 6100 level. Volatility trigger and put wall, short call strike of the Captain Condor, Iron Condor. All right, now it looks like ES is showing that S&P 500 is reaching down to the 6100 level. That was noted as support in the Spotgamma AM Founders Note. That's also a large Gamma 3 level. And note there is a difference in price between ES and SPX. Somewhere today it is somewhere between 33 and 34. I'm using 33. That may be a little bit low, maybe 33 and a half. All right, so SPX testing the 6100 level. So that's the key level in play for today. Note the SPY call wall is at 6100 here. There are a couple of combo levels for SPY that have been in play. All right, so that's the S&P 500. We'll take a look at setups in just a few minutes. That's the ES, S&P 500. Let's take a quick look at Nasdaq. Take a look at the underlying index charts. I'm just going to skip this. I don't know what's going on with my charts. Seems to be changing all the charts to that chart setup. All right, so you can see the QQQ levels and NDX levels on this chart. Here's the QQQ, 530 absolute gamma strike. The call wall is up at 540, 529 volatility trigger. So Nasdaq trading down below the 530 strike, absolute gamma strike, heading down to the 529 volatility trigger. Again, we'll take a look at setups in just a few minutes. And note I do post those index relationships that I'm using every day in Discord. All right, let's wrap up our review, our positional analysis by taking a look at Gamma for today. And I'm going to start with Gamma notional at the beginning of the day. This is market maker's position on the Gamma curve at the beginning of the day for the S&P 500 and Nasdaq and Russell 2000. Note with the exception of IWM, all these numbers are positive. They all increased from yesterday. In a positive gamma environment, this indicates for an index that traders are short calls, market makers are long calls, hence the positive gamma. They have to trade against price to hedge their delta exposure. All right, let's take a look at a real-time view of gamma now. Let's go to the trace tool, Spotgamma trace tool. I'm going to step back toward the beginning of the day. Let's go back to 9:30. All right, so you can clearly see it at 9:30, cash open here today, this iron condor. So this is showing market maker's position. And on the call side, it's 6140, 6145. So the trader, Captain Condor, is short the 6140 calls, long the 6145 calls. So that's the short call strike of the Iron Condor. And on the put side, the trader is short the 6090 puts, long the 6085 puts. And market makers have the opposite side of that trade. So they are long the 690 puts and long the 6140 calls. So that's the iron condor. And you can see the blue shaded area. That's the positive gamma zone in between 6140 and right around 6090. And Stephen asks, what does it mean, positive gamma notional? Does that suggest it's going to crush IV? No, positive gamma notional means that price will move slowly through this area as market makers are trading against price to hedge their delta exposure. And so look at gamma notional in terms of the velocity of price movement. And then this area of positive gamma with negative gamma above and below. So if price broke above in this negative gamma, that implies that there will be potentially a faster move higher or a faster move lower. And Stephen asked, if we were in negative gamma, then IV would be high. Most likely, but in negative gamma environment, that means that the price is moving faster. So yeah, potentially yes, but I don't think there's a direct correlation. I don't draw a direct correlation between positive and negative gamma and an IV, just price velocity, which could imply implied volatility. All right, so that's at the beginning of the day. So let's step through time now. So notice as price starts to move down, the gamma, especially at the 6140 call strike, is starting to diminish. Maybe that traders taking that off, or as price moves down, the gamma is decreasing. We can check open interest. Well, open interest won't change during the day. All right, so as price moves down, gamma at the 6140 strike is decreasing. Gamma's greatest at the money at expiration. And DB asks, do you have any affiliate links for Spotgamma? I used to. I don't. I'm not sure that is still available. If you want to join Spotgamma, just go ahead and do it. Tell them I sent you. But I don't have. Sorry. Thanks for asking. I do not really have an affiliate link at this point. All right. Let's take a look. So we see that price is approaching now the 6100 and the 6090 level. All right, so let's take a look. Let's go back to Thinkorswim, and I want to take a look just in case there's any question about what an iron condor is. This is an iron condor. So the idea is that you're selling premium. This is zero DTE iron condor. I just guessed at the opening price today. This is probably pretty close. $1.30 credit for this zero DTE iron condor that was placed. It was actually placed as a one-day iron condor. So it was placed before the open today. So placed yesterday. Let's take a look at the options chain, and we can take a look at, let's take a look at open interest on the put side. So open interest, this is set at the close yesterday, and this data is available sometime overnight. So this will not change today, this open interest. So that is the 60.90, 60.85. So you can see the very high open interest at that level. Then on the call side, 61.40, 61.45. So again, you can see the very strong open interest, much higher compared to the other strikes. So that is the Iron Condor, Captain Condor, third day in a row. So the way this Iron Condor works is the first day was a loser. So the trader doubles down the next day. And due to that spike that old boy was talking about yesterday afternoon, the second day was a loser. So the large trader doubled down again today and put that very large Iron Condor in place. All right, so that's the S&P 500. All right, let's move on now. We'll take a look at Charm and see what the potential is. So it looks like right now, just looking at Gamma, that the potential pinning target for today is that short strike of the Iron Condor, the 60.90 put wall, and key Gamma strike as well. So a lot of positive Gamma attracting price down to that level. All right, let's take a look at some setups, then we'll get back to that. So I'm going to start with the S&P 500, start with what options traders have been doing today. So this is the hero signal, Spotgamma hero signal. And this is the index signal showing options trades and market maker hedging activity for the S&P 500 index components, SPX, SPY, ES, SPX. Orange line is calls, blue line puts. The direction of the line is in terms of delta notional. So rising orange line indicates traders are buying calls, rising blue line indicates traders are selling puts, and vice versa. So let's zoom in, take a look at this move lower in the morning. So what this is showing, first of all, a little bit of a bullish opening drive for the first 15 minutes. Traders were buying calls. And then right at 9:45, they take the foot off the gas. Right around 10, or actually before 9:55, start selling calls. A little bit of a call peak there at 10 o'clock. And then traders start selling calls and buying puts. So looking this in terms of patterns, first of all, an opening drive, then call exhaustion, call peak, and then bearish continuation. Setting up a short right around 10 a.m. All right, let's take a look at the other signal for the S&P 500. This is the S&P 500 equity signal. And I do look at both. Today, I thought the index signal was provided a little bit more timely, valuable information. Note the call peak here and the equity signal comes in a little bit later. Remember, on the index signal, 9:45, call buyers took the foot off the gas and then started selling calls. So the index signal in the morning was definitely more responsive today. All right, let's go to Bookmap now. Go back to the S&P 500. Let's zoom in on this. All right, sorry about that. All right, so here's the bullish opening drive. Looks like a stop run. You can see the yellow line rising. Stop run, buy stop orders fueling that move higher. Notice at the same time, large traders are fading that move. That's shown by the light blue line with the iceberg orders. They were selling into that move higher. Stop run up. 9:45. Large traders resume selling ES contracts with large orders they use to hide their size. Buy stop orders stop, and then all three lines, cumulative volume delta shown by the dark blue line, sell stop orders and large traders selling iceberg orders help to fuel that move lower as the index hero signal shifted to a bearish continuation pattern, traders selling calls and buying puts. All right, so there's the short setup this morning. Initial entry right after 9:45, then right after the data release at 10 a.m. Another short entry at the 610 call wall, another the 6120 resistance level as price continued to make a series of lower highs. All right, so that's the S&P 500. We'll zoom out. All right, let's take a look and see what is going on now. So right now, it looks like ES has found a little bit of support right around the 60.95 volatility trigger. So the next level below is that 60.90 strike. So it looks like Captain Condor, if price continues to move lower, may be a loser again today. All right, so let's see. Price starts to roll over. Or actually does a nice trend break just before noon. Volume dots are showing a pretty abrupt shift from aggressive buyers. You can see the small green volume dot. Volume dots show market buy minus sell. Buyers are exhausted. Large magenta dot comes in. Aggressive sellers. Pullback entry. Again at that 610 call wall. And price makes a series of lower highs down right now to the volatility trigger. Maybe lower. So let's see what options traders are doing. All right, so now it looks like put buyers are in control. Let's take a look at the delta notional. So the call buyers driving price in the morning. Delta notional 1 billion versus for calls versus minus 3.8 billion for puts. Put buyers driving price, especially after noon, after maybe actually about 12:30. So the call buyers took their foot off the gas, selling a few calls. Then the put buyers really started buying puts right around 12:30. So put buyers are now in charge. Call buyers in the morning. Put buyers now in the index. Let's check the equity signal. Choppy today, but it looks like. Note these notional values much, much smaller than the index. Almost an order of magnitude smaller. So let's take a look at a couple of patterns here. So a call peak pattern right around 1150, 1155. A little bit of a bearish continuation, but traders continue to buy puts. So again, for the equity signal, starting in the afternoon, the put buyers have been in charge. So right now we know that put buyers are in charge of both the equities and the index, driving price lower. Let's go back to trace. Let's shift to delta pressure. I'm going to go back to, let's go back to around noon. So you can see this morning, this red zone is delta pressure, negative, or it's kind of like a heat map for Bookmap. This is option selling pressure, market maker selling pressure, delta pressure. So the S&P 500 was bumping up into that red selling pressure zone. All right, let's go back to gamma now. So that's at noon. We'll go back to the current. So Stephen, regarding your question before, so if price breaks down through the hedge wall, 60.95, 60.90 put wall key gamma strike, I would expect faster movement down into that negative gamma zone. All right, so that's the S&P 500. Let's take a look at Nasdaq. And I'm going to go to the, so this is the Nasdaq index signal. A little bit choppy in the morning, but as you step back, take a look at the overall chart here today. It is pretty closely correlated. Again, put buyers driving price. Let's zoom in a little bit. So you can see in the morning, before this price started to move lower, traders started buying puts. So we know the S&P 500 index and equities put buyers are driving price. Looks like the same here in Nasdaq. And then right around 10, traders start selling calls. So that is a bearish continuation pattern. And Stephen says, if we break below the volatility trigger, will it change the Spotgamma Founders Note consensus? So remember, the Spotgamma Founders Note was written this morning. So, and the Brent did indicate that he expected one side of that iron condor to be tested today. So right now, it certainly looks like the put side of that iron condor is going to be tested today. All right, so that is the Nasdaq signal, and again, starting around noon, traders start aggressively buying puts, selling calls. So this is a bearish continuation pattern afternoon. And Stephen, remember the options chain that we looked at for the S&P 500. This is the way an iron condor is always structured. A short put spread on the downside and a short call spread on the upside. That is the definition of an iron condor. So now, just based on this simulated trade that I put on this morning, if I had put this on, I would have been out a long time ago. It was profitable mid-morning. So, if it was me, I would have been out a long time ago. All right, so that's an iron condor. Short put spread on the downside, short call spread on the upside. And the idea is you want price to stay within that range. All right, let's take a look at Mag 7. DB says, I really enjoy your founder's notes, trace tool, and finally the hero analysis. Thank you. Thank you very much. Rainy Day says, poor guy, gal, just can't win, or can he? We'll see. So far, it looks like maybe a third day of losses. And oh boy asks, is that put leg 60, 85, 90 of the iron condor still open now? Maybe the seller closed it. We'll take a look at that in just a minute. We'll get back to the S&P 500. Let me go through a few setups, and then we'll take a look at that. We may not be able to tell. Actually, I think maybe we can. So we'll take a look at that. All right. So this is the Mag 7. Zoom in this morning, so you can see more of a call peak here. Bullish opening drive, call peak. Traders start selling calls, buying puts, and that starts a bearish continuation pattern. So bullish opening drive driven by call buyers, call peak, topping reversal pattern, and then a bearish continuation pattern. Here another call peak, looks like kind of a false peak, but the thing here is traders start buying puts. That's what's driving price. Then right around 1 o'clock, they start selling calls. So right now, Nasdaq in a bearish continuation pattern. Let's go to Nasdaq. Looking at order flow here, you can see large traders fading this move with iceberg orders. That's the light blue line. Sell stop orders fueling the move lower, and also cumulative volume delta also falling. All three lines falling, as well as traders buying puts, selling calls in both the Nasdaq index component as well as the Mag 7 stocks. So a very bearish setup. Every indication of price, every indication of the drivers of price, options traders, large traders with iceberg orders, smaller traders with sell stop orders, and aggressive sellers, all moving Nasdaq lower. All right, let's take a look at some stocks. Then we'll get back to the S&P 500. First stock I want to take a look at is Apple. Let's go back to Hero. We'll focus on the Hero patterns. The reason we focus on patterns is because they're easily recognizable and they have a known outcome, known behavior to these patterns, just like people look at chart patterns. We have identified some Hero patterns now. Bullish opening drive, call peak. Note the 225 key gamma strike. Price did break above that level, then it acted as resistance as traders started selling calls. Price moves lower as traders sell calls. Bullish opening drive, call peak, reversal at the 225 key gamma strike. Let's go to Bookmap. Here's your entry. Right, that reversal below the 225 key gamma strike. Market pulse price change extreme helps to mark that short entry point. So again, bullish opening drive, call peak, and then traders start selling calls and buying puts. Price moves lower, high liquidity targets, primarily at 222. Typical of a stock. Limit buy orders come in at 222. Price moves down to that level. All right, next stock, Google. A little bit of a different reaction here in Google. You can see all the green volume dots that come in right around 945. A lot of aggressive buyers. 200 is the call wall key gamma strike. There was a reversal lower at that level, so the call wall did its job, acted as resistance. Now traders bringing price back up to that level. Note the rising cumulative volume delta all day. Green volume dots, rising cumulative volume delta. Let's see what options traders are doing. Let's go to Google. Zoom in a bit. All right, so zooming in a bit, you can see not really a sharp call peak. Bullish opening drive up to the call wall. As price reaches that level, call buyers take the foot off the gas, a little bit of call exhaustion, and then start selling calls. A few minutes later, traders started buying puts. Key here was price did reverse at the 200 call wall key gamma strike. Looks like the call buyers came back in, driving price higher. So Google bucking the trend today. Call buyers, as well as aggressive buyers, driving Google back up to that 200 level. All right, next stock, Meta. Meta also bucking the trend today. Very strong bullish opening drive. Price breaches the 640 call wall. And that does happen in stocks like Meta, where they're aggressive call buyers. So that call wall breach. So when traders buy calls, market makers sell the calls, and they have to buy stock to hedge the delta exposure. So they are their short calls are concentrated at 640. So as those calls go deeper in their money, their delta exposure becomes more negative. They have to continue to buy stock to hedge their delta exposure. So that can help to fuel that roof higher as that call wall is breached and market maker's position goes deeper in the money. So it's very strong opening drive. In this case, just call exhaustion. Call exhaustion. Up until about 11:30, traders started buying calls again. And then more call exhaustion. So that call buying, that fuel that has been driving price higher, has slowed down. There could be some charm effect going on as well, as calls that expire today are starting to lose value. So market makers are in a position now where they can start to sell some of their stock hedge, as traders have stopped buying calls, and those calls that are expiring today start to lose value. All right, let's go to Bookmap. Go to Meta. All right, 640 call wall. For test of that level before price finally broke higher. Remember, traders aggressively bought calls, very strong opening drive, took the foot off the gas, a little bit of consolidation. Call buyers came back in. Price moved up to the next level. Note all the liquidity at these levels. Those are limit sell orders. That's right around 647, 40, 49, and 50, of course. And again, call buyers took their foot off the gas. A little bit of a charm effect. Traders have been aggressively buying Meta all day, shown by the rising cumulative volume delta. All right, next stock, Oracle. All right, Oracle was in the news this week with the Stargate announcement. Oracle, one of the key participants in, again, the Stargate AI project. Looks like traders are taking profits today. And Gex Rider says, Doug, testing their put wing for that big iron condor. Yeah, we'll take a look at that in just a minute. Quickly, Oracle. Traders taking profits after the big run up today. Zoom in. Bearish opening drive, traders selling calls. Price moves lower. Traders continue to sell calls. Then starting around 12:30, they started buying puts as well. So right now, this is a bearish continuation pattern. Final stock, Palantir. Let's go to Bookmap, and then we'll take a look at Palantir. Oracle. So again, bearish opening drive. Then right now, a bearish continuation pattern, puts and calls. Oracle moving lower. All right, Palantir. Bullish opening drive. A lot of aggressive buyers, rising cumulative volume delta. You can see all the green volume dots. Let's see what options traders are doing. Palantir. Bullish opening drive. 80 call wall breach. Call exhaustion. So that fuel that was driving price higher is gone now. And now Palantir starting to move lower as, again, the call buyers have left the building, and a little bit of a charm effect as well, as calls that expire today are losing value. All right, let's go back to the S&P 500. So it looks like, as Gex Rider says, the S&P 500 is testing that put wall. Let's go to Bookmap. Go to ES. There's the put wall. All right, so as Spotgamma indicated this morning, Brent expected one side of this iron condor to be at least tested today, and it looks like the put wall was the level tested. Let's take a look at Trace. I'm going to zoom in just a little bit. And let's check open interest. See if we can all right, so it looks like in the last hour that has not really changed any. So we don't expect open interest to change, or I don't. I normally look at this GEX. So the gamma, of course, not has all but gone on the 6140 strike as price moved down. Again, remember gamma is greatest at the money at expiration. So the gamma, the 6140 strike has disappeared. And the gamma at the put strike has not. Let's take a look at Charm. Interesting. So Charm is showing the potential pin at 60.95, the volatility trigger, above the 60.90 level. Go back to Gamma. Let's check delta pressure. All right, so SPX did move down into this zone of blue buying support. And you can see the hero line, this purple line, is starting to rise. And that is I have the index hero signal here. SP 500 index hero signal. So let's go back to hero. Go back to the index side. Zoom in on this a bit. So you can see now traders are starting to buying puts. As price moved down to here's the put wall. As price moved down to that level, traders started selling puts. Contrary and options traders behaving as expected, selling puts at that level. And looks like maybe helping to save Captain Condor. Let's check the equity signal. Same thing, a little bit more pronounced here now. Traders are buying calls in equities as well as selling puts with a test of that 60.90 level. And again, Charm showing a potential pin at 60.95. All right, back to Bookmap. Let's zoom in on this just a little bit more. So you can see some aggressive buyers starting to come in. More green volume dots. Rising cumulative volume delta. No help from large traders with iceberg orders. They're still selling. So we know that equities, options traders are buying calls, selling puts in the index. So if that continues, price may move up. But again, Charm was showing the potential pin right here at 60.95. All right, last call for stocks, questions, comments. One last check of Hero. That's equities. Index, so they're buying calls and selling puts in both the index and equities. As price tested the 60-90 put wall key gamma strike. All right, everyone. I want to thank you very much for watching. Thank you for your questions and comments. I will be here on Monday and Wednesday next week. Next week looks like a big week. FOMC on Wednesday, and then Mag 7 earnings start later in the week. So we'll talk about that on Monday. Everyone have a great weekend. Thank you very much for watching. Thanks for your questions and comments, and I will see you on Monday. Bye.